Over the past 2 decades, the focus of many investors has shifted from picking winners to opting for broad, passive market exposure. The reason investors move from active to passive investing are many, but the challenge for wealth managers is often the same. How can you help your client transition without incurring a large tax bill? And the answer is, it depends how closely they want to follow their chosen benchmark, minimizing what's known as tracking error. Take a client who holds highly appreciated positions in an active portfolio, a common scenario today. Now, say this client seeks to reduce their risk by diversifying into a passive allocation. If the investor insists on exposure to a benchmark with minimal tracking error, then an exchange-traded fund, or ETF, may be adequate. The transaction is easy, though the trade-off may be a large capital gain realization when they sell existing positions to buy into the ETF. However, if the client can live with some divergence from the benchmark for a period of time, a custom passive separately managed account, or SMA, presents a compelling alternative. Unlike in an ETF, in an SMA, an investor purchases the underlying securities of their chosen benchmark. These new stock purchases live in the SMA alongside the investor's large appreciated positions, which are transferred in kind to the SMA without having to trigger a full capital gain realization. The portfolio will likely deviate from the investor's chosen benchmark at first, but as with any broad passive allocation, even in a rising market, many stocks in a given benchmark fall. By strategically selling those underperforming equities and harvesting those losses for tax purposes, the SMA portfolio manager can offset the capital gains realized from selling the investor's large appreciated positions and gradually work to bring the portfolio closer to the client's chosen benchmark. Welcome to the win-win of the custom passive SMA. A portfolio delivering broad passive exposure like an index ETF, but one engineered to reduce the investor's tax liabilities over time. Have a client thinking of transitioning from active to passive investing? Let Parametric illuminate all the options and trade-offs. Request a transition analysis that you can share with your client and help make the move to passive investing smarter. Visit parametricportfolio.com/transition